Welcome back to our channel, where we provide you with valuable insights into the world of investing. In today's video, we'll be diving into the fascinating realm of reading stock charts. Specifically, we'll focus on reading stock charts for beginners, analyzing price patterns. Understanding how to interpret stock charts is a fundamental skill for any investor. By analyzing price patterns, we can identify trends, make informed investment decisions, and potentially maximize our returns. So, get ready to embark on this exciting journey of decoding stock charts together. Before we jump into analyzing price patterns, let's first understand the significance of stock charts in the world of investing. Stock charts, also known as price charts or price graphs, display the historical price and trading volume of a particular stock over a specific period. These charts provide us with valuable information about the stock's past performance, trends, and patterns. Now, let's explore the key benefits of reading stock charts. Benefit 1. Identifying trends. By analyzing stock charts, we can identify trends in stock prices. Trends can be categorized as upward, bullish, downward, bearish, or sideways consolidation. Recognizing trends is crucial because it helps us understand the overall market sentiment and make informed decisions based on the direction of the stock. Benefit 2. Spotting price patterns. Stock charts allow us to identify various price patterns that can provide insights into the stock's future price movements. Patterns such as head and shoulders, double tops, triangles, and flags can indicate potential reversals or continuations in the stock's price trajectory. Recognizing these patterns empowers us to time our entry and exit points more effectively. Benefit 3. Assessing support and resistance levels. Stock charts also help us identify significant support and resistance levels. Support levels are price levels at which a stock tends to find buying interest and bounce back, while resistance levels are price levels at which a stock faces selling pressure and struggles to move higher. Understanding these levels can guide our decision-making and help us set appropriate stop-loss and take-profit levels. Benefit 4. Gauge market volume. Volume is an essential element in analyzing stock charts. It represents the number of shares traded during a given period. By observing volume alongside price movements, we can assess the strength or weakness of a trend. Higher volume during price advances and lower volume during price declines can confirm the sustainability of a trend. Now that we understand the benefits of reading stock charts, let's dive into the basics of analyzing price patterns. Step 1. Selecting the right chart type. There are several chart types, including line charts, bar charts, and candlestick charts. Candlestick charts are widely used and provide a visual representation of price movements. They display the opening, closing, high, and low prices for a given period. Candlestick charts are great for identifying patterns and understanding market sentiment. Step 2. Determining the time frame. Selecting the appropriate time frame is crucial when analyzing stock charts. Short-term traders may focus on intraday or daily charts, while long-term investors may prefer weekly or monthly charts. Different time frames provide different perspectives on price movements and can help identify different patterns and trends. Step 3. Recognizing key price patterns. There are various price patterns that can provide valuable insights into a stock's future direction. Some common patterns include 1. Head and shoulders. This pattern consists of 3 peaks, with the middle peak, the head, being higher than the other 2, the shoulders. It often indicates a reversal from an upward trend to a downward trend. 2. Double tops and bottoms. These patterns occur when a stock reaches a similar high, double top, or low, double bottom, on 2 occasions, indicating potential trend reversals. 3. Triangles. Triangles form when the price consolidates within converging trend lines, indicating a period of indecision in the market. A breakout from the triangle can signal a new trend. 4. Flags and pennants. These patterns occur during periods of consolidation within a strong trend. They resemble a flagpole, or pennant, and can indicate a continuation of the trend. Step 4. Confirming patterns with indicators. Indicators such as moving averages, relative strength index, RSI, and volume can help confirm the validity of price patterns. For example, a moving average crossover or divergence in the RSI can provide additional confirmation of a potential trend reversal. Let's recap what we've covered so far. 1. Stock charts provide historical price and volume information, enabling us to analyze trends, identify price patterns, assess support and resistance levels, and gauge market volume. 2. Benefits of reading stock charts include understanding market sentiment, timing entry and exit points, and setting appropriate stop-loss and take-profit levels. 3. Analyzing stock charts involves selecting the right chart type, determining the time frame, recognizing key price patterns, and confirming patterns with indicators. Congratulations! You've reached the end of our comprehensive video on reading stock charts for beginners. I hope you found this information valuable and insightful. Remember, analyzing price patterns takes practice and experience, so don't be discouraged if it feels overwhelming at first. With time and dedication, you'll become more proficient in deciphering the secrets hidden within stock charts. If you enjoyed this video and found it helpful, please consider subscribing to our channel for more educational content on investing, trading, and market analysis. Don't forget to hit the notification bell to stay updated with our future releases. Thank you for watching, and until next time, happy chart reading.